Welcome back to our Infinite Banking Versus series. I'm Jonah Dew.
And I'm Shawn King, and today we're diving into two distinct savings vehicles for education and wealth building. We've got the 529 plan and the infinite banking concept, often referred to as IBC.
Let's start with a brief history lesson. Let's talk about the 529 plan. So this was introduced in 1996 under Section 529 of the Internal Revenue Code. These plans were designed to encourage saving for education by offering tax-free growth and tax-free withdrawals for qualified education expenses.
And over the years, rising college costs and the desire for tax-efficient savings actually made 529 plans very popular. Today, almost every state offers its own version with variations in fees, investment options, and state tax benefits. This means that what works best in one state might be different in another state.
Exactly. And while 529s are tailored for education, they're not always flexible if your child decides to take a non-traditional path. And that's where we need to compare some of the other options.
Now, on the other hand, we have IBC. The infinite banking concept has roots going back several decades, but started to gain traction in the 1980s as financial professionals began to look for alternatives to traditional banking. You see, IBC uses whole life insurance policies to create what we like to call a personal banking system, allowing for steady cash value growth, guaranteed returns, and flexible tax advantage access to your funds.
It's been a game changer for those who want both long-term security and versatility in using their funds. So whether for education, business, or just other life goals.
So Jonah, let's jump into our 8 ideals and kick it off with principal protection. With 529 plans, your funds are typically invested in mutual funds or similar vehicles. Think back to the market dips during the 2008 crisis. The value of these accounts can drop if the market takes a hit.
In contrast, the infinite banking concept uses a whole life insurance policy where your cash value is guaranteed to grow steadily. It does not matter what the market does. Your principal is safe. So imagine riding out in a storm in a sturdy, well-built ship. Your money is just not tossed around by market waves.
It's like comparing a fragile vase to a reinforced safe. You know exactly where your money is, even during turbulent times.
Now, Shawn, let's get on to guarantees. With a 529 plan, returns are entirely market dependent. So some years can be brilliant, but there are no really contractual guarantees, so you're just riding the market's up and downs.
With IBC, however, you have those built-in guarantees. Your policy has a guaranteed minimum increase each year, and many whole life policies pay dividends that add to that growth. It's like having a financial contract that says, no matter what, you'll get this much back.
Exactly. It's a promise you can count on when market conditions get unpredictable.
How about safety? I don't know about you, Jonah, but that's a huge factor in my family. A 529 plan is generally safe when the market is doing well, but a recession or an economic shock can end up putting quite a large dent in your savings.
The infinite banking concept is backed by the strength and longevity of established insurance companies, and it offers that extra layer of security. So even during economic downturns, these companies have weathered multiple storms. We don't use any companies for the infinite banking concept that haven't been around for over 100 years, sometimes even 150. You can think of them like a rock in that turbulent sea.
And that stability really provides peace of mind, knowing that your savings aren't just going to poof, vanish when you need them most. Now let's be honest, I do enjoy some good magic, but I'm not trying to see my money vanish.
Shawn, next up is liquidity. So with the 529 plan, the funds are earmarked strictly for education. So if you want to use the money for another purpose, you can face penalties or tax consequences.
On the flip side, IBC provides real liquidity. Need to cover tuition, launch a business, or handle an emergency? You can borrow against your policy's cash value at any time with no penalties, and the policy keeps growing while you repay.
I know of families personally who tapped into their infinite banking concept policies to cover unexpected medical expenses, all without disrupting their long-term savings plan.
I was actually able to use my policy to pay off a nice chunk of student debt. I'm telling you, Jonah, that kind of flexibility is hard to beat. So I think it's time we talk about a fan favorite and something people always bring up: rate of return. You see, Jonah, 529 plans can yield impressive returns in a booming market, but it's important not to forget those returns come with the risk of market volatility.
Infinite banking, meanwhile, offers more modest but consistent returns, and that's key. So while you might miss out on some of the high market peaks, you're rewarded with predictable, guaranteed growth year after year.
It's really a question of whether you want to gamble on the market highs or enjoy a nice, slow and steady climb, like comparing a sprint to a marathon. And to be completely honest with you, if you had an infinite banking policy, but you absolutely love the idea of a 529, you could take money out of that and you could do both.
Consider the use of these funds. 529 plans are laser focused on education expenses. So that's tuition, that's books, that's room and board. But what if your child chooses a gap year or a non-college route, or it goes to a school that doesn't accept the government sponsored plan?
You see, that's where IBC really shines, Jonah. With your infinite banking policy, the cash value is extremely versatile. Use it for education, but also for starting a business, investing in real estate, or even as an emergency fund.
It's like having a multi-tool in your financial toolbox versus a single purpose gadget, right?
Exactly. The freedom to decide later on how to use your funds is priceless. I don't know about you, Jonah, but when I look at the options, taxes are always a consideration. With 529 plans, you get tax-free growth and withdrawals, which is great, but only if the funds are used for qualified education expenses. Any deviations can trigger taxes and penalties, so my kids better go to college.
Infinite banking, on the other hand, offers tax-deferred growth. Plus, when you borrow against your policy, it's generally tax-free as long as it's structured correctly. And don't forget, the death benefit is typically tax-free as well. It's definitely income tax-free to your beneficiaries.
Imagine building wealth for your family while keeping Uncle Sam at bay. That's a huge advantage in long-term planning.
Finally, let's talk about our eighth ideal here. It's long-term legacy. If you're left with unused funds in your 529 plan, you might be able to roll them over for another beneficiary, but it's not really designed as a legacy tool. I know a lot of times people say if that your kid decides not to go to school, you can use the money yourself to go to school. And I just kind of think that's weird. That's not the purpose of me starting the plan, right?
What if I don't have any other kids? I can guarantee you I'm not going back to school. But IBC, however, is built with legacy in mind. The tax-free death benefit can serve as a lasting financial foundation, ensuring that your hard-earned money helps future generations. It's about creating generational wealth and leaving a lasting impact.
So whether it's funding a grandchild's education or seeding a family business, infinite banking can transform your savings. It's this multi-generational asset.
That's the kind of legacy that lasts long after you've written your final chapter. So when it comes to planning for education savings versus creating a flexible financial legacy, which do you think fits your goals better? A 529 plan or IBC?
If you're laser focused on education, a 529 plan might be ideal, but if you want guaranteed growth, flexibility just in case, and a powerful legacy tool, then infinite banking is probably your answer.
Ultimately, you guys, it's all about aligning your strategy with your personal goals and values. Let us know your thoughts in the comments below.
Thanks for watching. Don't forget to like the video, comment below, subscribe to our channel for more insights. You can of course click the link in the description of this video if you're interested in chatting with us. I've helped more than one person take the exact amount of money that they were putting into that 529, put it into a guaranteed product like an infinite banking policy, and that way we can map out exactly how much money they're gonna have for their children when they get to school. But of course, if they wanna use the money for that child's first car or for cosmetology school, if they decide not to go to a university, you can do that too. So just click the link in the description, reach out to us. We'd be more than happy to talk to you.